If you owed taxes this past year and you heard that you should probably start doing quarterly tax payments, that actually might not be true. We're going to break down when it's appropriate to actually set up quarterly tax payments and how you would do it. You don't want to miss it. Thanks for tuning in, guys. Again, if you like today's content, be sure to hit that like and subscribe button. And of course, if you need more in-depth guidance regarding your overall finances, tax planning, investment planning, whatever it may be, reach out to us at www.modernwealth.com. That's modern spelled with no vowels, wealth.com. So one of the most common questions that I get from folks that owe taxes at the end of the year, they've just filed their return. They found out that they owed taxes. A lot of folks are under the impression that they need to start paying quarterly tax payments, right? Quarterly taxes are what people do when they owe taxes and start making a bunch of money, right? Yes and no. So if you have found yourself in a position where you owe taxes, it's important to determine, first and foremost, how much it is. If it is, only maybe a couple $100 or $1,000, $2,000, and you aren't at risk of incurring any underwithholding penalties, then maybe you don't have to make any adjustments at all. Maybe you can just keep going along and keep doing what you're doing. But if you are at risk of incurring underwithholding penalties, then maybe you should consider doing something like quarterly taxes. So before we talk about quarterly taxes, to remedy the fact that you owe taxes, there's a couple ways that we can go about it. Besides, doing more advanced tax planning, we're actually reducing the tax bill. If we're just talking about, how do we figure out how to manage those payments throughout the year, there's two very common ways that you go about it. Number one, if you have a job that withholds taxes from your paycheck on, let's say, a biweekly basis, then you can make a W-4 adjustment with your payroll department or HR. What this would mean is that you are going to voluntarily elect to pay more tax every single paycheck, or you're going to withhold more on every single paycheck. Now, if you decide to do this, right, that could easily remedy the situation that you're in, right? If you end up withholding, let's say, an extra $150 per paycheck, maybe that puts you in a position now where you are not going to be at risk of incurring any underwithholding penalties, and you are going to better budget for next tax season when you file, so you aren't blindsided with large tax bill. Now, personally speaking, I prefer utilizing the payroll withholding to optimize tax withholding when possible, right? I think that's the easiest way to go about it. It's very simple. Most people kind of understand that concept of just modifying their paycheck a little bit. It's very, very easy to do. Now, where maybe quarterly tax payments would be more appropriate, there's a few different scenarios, but let me break down two different ones where I see it most commonly. Number one, we're working with a business owner. They aren't an S Corp, right? So they're just a sole prop LLC. They don't have a W-2. They don't do payroll withholding, and they got to figure out a way to pay taxes throughout the year. Well, quarterly tax payments are a fantastic way for them to pay their projected tax liability, make sure that they're budgeting appropriately, make sure that they're not putting themselves at risk of incurring underwithholding penalties, right? It's a thing of beauty. Quarterly tax payments works fantastic for sole prop LLC business owners. Second scenario where it could work really, really well are for folks that receive a lot of, let's say, RSUs. For the folks that receive RSUs are withheld at only 22%. And so if you are in a very high tax bracket, that withholding of 22% on something like an RSU or a large cash bonus, whatever it is, it doesn't necessarily just have to be RSUs. It just has to be some sort of supplemental income. oftentimes that's woefully inadequate if you're just withholding that amount. And so what ends up happening is that sometimes people are on track to owe $15,000, $20,000 by the end of the year, right? That's a huge tax bill that they're going to have to potentially face. And on top of that, they're way under safe harbor and are at risk of incurring under withholding penalties. So as a result, if they modified their W-4 and started withholding more per paycheck, that ends up eating away at a large portion of their monthly budget. And so it becomes very uncomfortable to take a big bite every single paycheck. What ends up being more manageable of a way to handle it is by perhaps just setting up quarterly tax payments. So if they're projected to owe, let's say $15,000, they just fill in the gap. They divide 15,000, but divided by 4, and do 4 quarterly tax payments for that amount so that they aren't blindsided when they file. And then on top of that, they know they aren't at risk of facing any under withholding penalties. Third scenario where you might see it, and this is kind of more for retirees. I know I said I'd give you 2 scenarios, but I'll throw in a bonus for any of the retirees watching. But for folks that are retired, drawing money off of their IRAs or tax deferred assets, and are electing not to withhold on those distributions, oftentimes doing quarterly tax payments could be a potential way to manage your projected tax liability rather than just simply withholding from those distributions. So bottom line is, doing quarterly tax payments could potentially make sense based off of circumstances. It could also potentially not make sense. Maybe it makes sense to actually do a W-4 adjustment, or maybe you're actually in a better spot than you realize. You don't need to make any changes at all. If you are concerned about under withholding penalties and how that works, we did a separate video on that particular topic. I'll be sure to link that in the description of this video. And of course, if you've watched all this and you want to set up quarterly tax payments yourself, it is relatively straightforward. Let me go ahead and just screen share that for you guys. So this is IRS Direct Pay. Again, just look up IRS Direct Pay online. The first result should take you to this page on the IRS's website. All you're going to do is say make a payment. When you say make a payment, you're going to select the reason for that payment. You're going to go ahead and select estimated tax. You're going to choose the tax period it's associated with. You're going to continue, and you're going to go ahead and chug along through this entire thing. So again, pretty straightforward. You're going to go ahead and plug in through this. It's multiple steps. When you get to the end and they give you the confirmation, I would encourage you to print out that confirmation page so that you have it for your records. And again, you're good to go. In terms of the methods of how to calculate your quarterly tax payments, that's a discussion for a separate day. But in terms of just setting up quarterlies and paying them online, it is relatively straightforward. Again, don't forget, if you have a projected state tax liability as well, you're going to have to potentially set that up on the state side in addition to all of that, which is, again, why my preferred method, if possible, is to do the simple W-4 withholding, modify the withholding per paycheck. But it doesn't make sense in all cases, and quarterly tax payments sometimes make more sense as a way to complement the withholdings that you're already doing. So hopefully you found this informative. Again, if you like today's content, be sure to like and subscribe. And of course, if you need more advanced tax planning, more help with your own finances, reach out to us at www.modernwealth.com. That's modern spelled with no vowels, wealth.com. We'll see you next time.